GM traders and investors, Blake here. As always, none of this is financial advice. Trade and invest at your own risk. This video should help you get prepared for this week's trading and also give you insights into how I'm reading this market and how I'm trading it. So let's get it started here. If you guys have been following me, I've been bearish really since we broke below this cloud, which is the 50 simple day moving average. And yeah, it's been very tough trading this entire year. We've only had two uptrends this year, and these are the lows dating back to the COVID lows. So we've had a massive rally since those COVID lows, and so far this looks like a rounding top, just from my perspective. And we're starting to close below key pivotal levels, and our line in the sand is 410 on the S&P. So those of you that are members, you get the daily trading playbook, and in there we have our line in the sand for investments. And on the S&P, that number is 410. That's essentially this low right here from February 24th. Yeah, we're flirting with that level again. So it's been very difficult swing trading this year. We've had one good uptrend that paid, and yeah, this market is tough trading. We have an environment that's continuing to be difficult. We have inflation, we have geopolitical risks, and we have slowing growth and a raising rate environment. So this is definitely a little bit different than what we've been used to from a macro perspective. So there are some macro forces at play here, but regardless of all of that, price structure tells us all that we need to know. And what we've been knowing is that this is not going to be easy trading. We're below key moving averages, the 200, the 50, the 10, continuing to make new lows, trap the bears, and then rip 3% in a day, and then trap the bulls, and then reverse the next day. It's very volatile. We have a VIX that's above 30, and if you're losing money in this market, it's probably because you're trying to trade this. This is very difficult trading if you're not experienced and you're not giving yourself a wide enough stop. And the reality of it is, in no trends and downtrends, the priority is always preserving capital. So this candle right here, boom, back into no trend, preserve capital. And look at what happened. Just got destroyed. This trading here where we're super green, up 3%, down 6%, up 3 green days in a row, Fed rally, and then the next day we just gap lower and dump, right? So this is very difficult trading. We're going to be taking it one day at a time, and really, yeah, until we get back above this cloud, yeah, the odds are lower. The odds favor lower prices, and this thing can go much lower. This may be the start of something more significant. If you look at the monthly time frame, you can see just how much from the 2009 lows. You can see how much the S&P has ripped, right? Had some volatility, right? And exploded again. And we're breaking trend on a monthly time frame. We're now confirming trend on the higher time frame. So the monthly is in a downtrend, right? So below this candle's low, which was 410, we're in a downtrend. The weekly time frame as well is confirming below the cloud on the weekly time frame, right? You can see when we get below this cloud, things don't things are have a tough time of going higher, right? So below the cloud, be defensive on the weekly time frame. It's just extrapolated from daily daily time frame that we utilize for swing trading. And the daily time frame has told us all that we need to know, right? Preserve capital, wait for higher odds, wait for uptrend, and you're going to have to be patient. This is very difficult trading, like I was saying. Let's take a look at some other indexes. NASDAQ looking very weak. IWM looks extremely weak. And then bonds, right? Can't put your money in bonds. This looks like it wants to go lower, rates going higher. And then let's take a look at gold, right? It's one of our hedges. Yeah, gold's still, it's a gappy type of asset, but higher time frames, still looks okay. Weekly still holding the cloud. And then monthly, this does look like still a bigger cup and handle playing out, just a little volatile lately. And then finally, yeah, obviously we got to take a look at crypto. So, what's Bitcoin telling us? Well, Bitcoin as well looks pretty sloppy, looks pretty ugly. It's below 250, 10 moving averages and breaking to new lows. This doesn't look good. Same thing with Ethereum, looks just kind of like it's bleeding out. We had, above 3,200. I think we have pretty high odds to at least challenge this 35. And above there, I think we probably go to the 618 extension, which is this basically 42, 4,300. But that's a long ways off, right? The macro trend is downtrend, and I've mentioned below 2,800, which was this horizontal line. Yeah, things don't look good. So yeah, be careful with Ethereum as well. You know, you guys know I'm very bullish. All the developments in Web3, NFTs, and Bitcoin and Ethereum. Yeah, but the short term definitely does not look good. So strap in and enjoy the ride. And then finally, let's just clean it up, wrap up with the S&P. So this week, yeah, we're going to be taking it slow. We're going to be taking it one day at a time. This has been very choppy trading. I think above this Fed high, above 430 on the S&P, I think you can start taking a stab at maybe getting some positions and some longer, some swing trades. And above the cloud, that's when we start to get a little more bullish, right? So until then, protect your capital, be patient. It's really hard to press short down here because we're already, well off of the highs, and they've been trapping shorts this past month, right? You close at the lows, gap higher the next day, close at the highs, gap lower the next day. Very, very sloppy, very hard to hold anything overnight. There is some opportunity intraday, but even intraday is definitely wild. So, yeah, if you're not akin or accustomed or don't like those trading odds, which I don't, priority for this week till we see price back above some key levels is going to be sitting on your hands, having patience, and waiting for higher odds. It's as simple as that. All right, guys, I'll see you on the open.